Have you ever had issues trading a ranging market? If so, keep watching, because today I will cover everything you need to know about how to trade a market in a range, where to put your stop loss, your entry, and your take profit level. We're going to also take a look at all the major currencies for the upcoming week. So while I wrote the intro and disclaimer, hit that like button for me, and if you're new to the channel, do not forget to subscribe. See you there. Welcome back, guys. In my previous weekly overview, I had two comments about ranging markets. So the first one was from Gigi Mania, and it was, "Thanks, Pierre. I trade only one market, Dow. When you say buy low, sell high on oil, where do you recommend to set the take profit before reaching the opposite level? Can you please explain in next weekly video where to enter, where to put stop loss, take profit in a ranging market? I'm interested in particular in oil, the way it looked last Thursday and Friday." So we will cover that. And we had another comment from Kashif Arshad. "Thanks for you looking into it," and he means about the quality of the video. "And it was really complex to trade USD short in last week. What you think about it, please let me know in your coming video." So here comes the answer for that, guys, because both of them are about ranging markets. So it is a great opportunity to show you how that could play it. So we will start with the question about the oil. And the question was about how it looks like Thursday and Friday. So on the 1 hour chart for oil, Thursday was this area here. So we had the prices was reaching this level on Thursday, and Friday the price reached this level once again, as you see. So how to trade a ranging market? It is always easy when we talk about ranging markets on textbooks. So what basically is a ranging market? Well, if you look at the textbook, it is about trading between two levels. So you have a market that not making neither higher highs or lower lows. So it's gonna look something like this. You have the market, let's say, it's coming from below, reach at a level of resistance, move back down, support, and now we start having the range when we have at least one high here, one low here. The next move to the upside, one could expect possible rejection. And as you see, it is a fair price here, and both buyers and sellers are happy with the price at this range, and it may keep going like this until something fundamentally new enter to the market. Then we're gonna see a possible break maybe to the upside or a break to the downside. So as far as there is no change in market sentiment, nothing fundamentally new, this called a fair value. Both sellers and buyers are happy with the price and trading in this area. So that is a range in a nutshell, but it looks always easy when you look at the textbooks, yeah, but on charts you will not get it as nice as you have it here. So let's take a look at that. So if we start with the oil, since the question was about oil, and particularly Thursday and Friday move. So these are the levels that we're gonna watch. Ahead of that, we had a clear range on oil, because as you see, after this move to the upside, we had this retest to the previously broken structure. The market bounced higher once again for another attempt to the upside, and this was the last high we had since then. Market pushed back down, and we start seeing this established range. Another attempt to the top here, which moved lower, a fake out below happened here. So this is where it gets tricky. As I said, textbook looks always great, but we will not always have such a scenario as we had here, almost to the pip before the market reversed to the downside. As you see here, we had a fake out, a trap, a bearish trap. Many traders got trapped here because there is those who trade the breakouts based on limit order or a stop order, I would say, and got stopped here, and we saw that the market directly moved back inside the range. As soon as that happened, we should expect the market to start respecting this level again. So yet once another time, as you see here, market pushed higher, could not break above this level, so we are now trading in a lower range. So keep always an eye on those levels as well, because this is also a range. You could see it like this. This is also a range. If you look at the wick here of this was also a fake out. We had this high, and we had this fake out, and the market pushed back down, another fake out, and here it got respected a couple of times. So when trading such market, keep an eye also on the inner range. That will happen as well many times, that you see two range inside each others. But since the question was about Thursday and Friday in particular, let's keep looking at those. So here we had the Thursday move. How I would enter this market. There is many ways to do that. My way of trading this in particular, my favorite ones are the ones with a trap. So after this candle, I would love to go long. It is a bullish engulfing candle. After a trap here, we get the bullish engulfing candle. This would be my entry. Stop loss with 180R below the low of the candle. I would target the previous structure high in such a scenario. Okay, for the Thursday move, we did not have that fake out, but there was also evidence on the chart. If we look at this move here, after the strong momentum candle here, the market kept pushing higher. But if you look at the bodies of these candles, very small bodies, this strong bullish candle got rejected quickly, and then we continued to have small bodied candles. The market was making higher highs, but on the RSI, we had a clear bearish diversion. That also something that I want to see on the RSI when I'm trading range. I would love to see divergence happening near the top, and especially if the RSI reached the extreme overbought, to then the price keep pushing higher like we had here, and then reach the top. When the price reached the top, the divergence was very clear. The next step here is a trigger near this area. What trigger should we use? In this case, we had actually a very nice bearish engulfing candle, this black candle here, that I want to use as my entry trigger. So at the close of that candle, enter the market here, and it's now about placing stop loss. Where to put our stop loss? Usually I would go with at least 180R, but from the 4-hour time frame. Okay, so keep following. Let's go to indicators and bring the 80R. Here we have it, average true range. I would put that on my screen during that period of time, and then I would go to the 4-hour time frame near the entry area here. So the entry was on the 1-hour time frame, it was here, so we moved to the 4-hour time frame, and I will check what is the ATR on that 4-hour time frame. So the ATR down here was at 0.50, so that means I will go with 0.50 above the previous structure high, and that is the previous structure high I'm talking about. This highest high here is up here, so my stop loss would be, let's say this was the previous high, 29.29, and I will add an ATR of 50, so that would be 0.79 to the upside on the stop loss. Okay, so 79 up, almost up here. Okay, an ATR from the 4-hour time frame above previous high, and target always would be the latest lowest low near the range, and I would use the body of the candle, not the wick. So if this had a wick like, let's say this candle had a wick like this, I would not use the lowest low of the wick. I would use the body of this last swing low we had near the bottom of the range. If that gives me more than 1-to-1, then I'm happy to go with the trade. Entry, as I said, after the close of the bearish engulfing candle, it have to be closed. And stop loss 1 ATR. Since I'm entering on the 1 hour, I want to be more safe. That's why I use the 4 hour, especially on oil. It is a volatile market and you cannot go with a tight stop loss here. The oil spikes a lot and you need to give it a bit of room to breathe. So if we would use an ATR from the 1 hour time frame, that would be 0.21 above the high, and that is for me, that is not enough. So that's why when I gonna enter the market, I will go to the 4 hour time frame and check that ATR and add it above the previous high here. That way I will give it a bit of room and I will wait for my target to reach. So in this case, the trade went like this. As you see, we had a nice push to the downside, didn't reach target, another correction, yet again a break below, and one could expect the market now to reach target. It didn't, and as you see, it went all the way back up to that structure. Had you put your stop loss as the textbook teach you about how to trade engulfing candles, every textbook you will see, they will tell you put the stop loss just above the bearish engulfing candle. In this case, you would be stopped out if you were still in the trade. Yeah, so if you were still in this trade waiting for that target, you would be stopped out. But since we gave the market a little bit room to breathe, it could go all the way to this level, all the way to 58.4 without stopping you out, to then give you another move to the downside and target got reached. So here there is many ways to play this. One could argue that the market did actually break above previous high. You maybe have rules about if that start to happen, you would close the trade in profit and go out. It depends, and it's up to each trader to have their own rules. But this is how I would play it. The same thing would go with this one to the opposite side. And if you didn't take the trade on Thursday, since the question was both about how the market react on those levels. So you had Friday here, the market did reach this level, and as you see again, very strong push to then, as if it hit a wall, the market start going sideways, very small bodied candles. And here we've got my favorite entry, and that is actually the trap. After a breaking above, slightly higher above all highs, we have now many trades that got trapped because they went long on the breakouts. After that, directly we've got a bearish engulfing candle, another trigger to go short. So I would enter at the close of that candle. So after the bearish engulfing close, I will enter the market. Same as before, you either target the bottom of the range or this previous low if you want to be more conservative about your target. So either the previous major swing low or the bottom of the range down here. And the same would go even this time. I would go to the 4 hour time frame, check the ATR and add it to my stop loss. So we go to the 4 hour time frame during this candle and check what was the ATR at this time. There was 47.47, so that would be once again 0.47 above the highest high. In this case, this candle was the highest high, and we will add those 47 above. And again, if we get 1-to-1, this is good to go. There is also another way to do it. As soon as you get a fixed one-to-one trade, take profit, you would take profit at the first level and target 2 at the bottom of the range. You could play it that way as well. But as always, you need to have some rules. What is the level you want to trade at? Why? What is your trigger? Is it you have to have a couple of triggers that you use: bearish engulfing, bullish engulfing, double top, double bottom. Whatever trigger you have, you need to have those in place before you start trading. So that is about oil, guys. Let's take a look at the Euro USD, and the question about that was that Kashif said it was really complex to trade Euro USD short in last week, and I think the reason he's talking about short, because I've been mentioning this move here on Euro USD, and we've been talking in my weekly overview that this level of interest here, since the market broke this neckline, we will start looking to short this market near that neckline break. So we had also our Fibonacci retracement when I talked about this, and I mentioned the monthly pivot point and the neckline as an area of interest. Now, what happened on Euro USD last week? Same as oil. You had a clear defined range, especially after this rejection. The market had this retest, another rejection here, and then we entered a narrow range before we tested once again this low to push all the way back up to this top of the range. Now, during this period of time, this was a clear signal. If that was not enough here, and you would let's say got bored of the trade with after this shooting star formation, you went out, for whatever reason, you didn't want to be in the market for a long time, the market gave you yet another chance. If we look at this on the 4-hour time frame, there was this break higher. Yeah, if you went long and waiting for more upside, the market failed to make a new high here, the market failed to make a new high here. So what are we waiting for? We should be looking to short this market, because it never was able to leave the range. So if we go down to that 1-hour time frame, at the top once again here, a new trader will get trapped a flag. They will see a flag and get very happy about it and trade it against previous swing high, which could be a short-term trade with a stop loss below this, but you probably will not have a target higher than previous high. That would not be a good idea. So what happened here? There was a break, everyone was happy, very strong candle. All of a sudden after that you get a doji candle, which is an evening star formation, a bearish candle. After that the market make the last attempt, and here we go again, we've got our trap. So another great example of how the traders get trapped. You have the trap, you have a the divergence is there on the 4-hour on the both on the 4-hour and the 1-hour. Another rule is met, and the bearish engulfing candle was huge here, so it was a clear signal for going short. When the candles are very big, you could wait for some correction before entering. You don't need to enter at the close of the candle. But let's say you want to enter at the bearish engulfing candle, no matter what. Again, you need to give some room. So if we take a look on the RSI on the euro, it is not a very fast moving pair. So for that one, I would look at the ATR on the same time frame, and in that case the ATR during that candle was at 0.78 0.78, yes. So that would be my placement above, give that room above the highest high, which is this candle in this case, push that above and targeting the bottom of the range. If you get a 1-to-1, you're good to go. If you don't get a 1-to-1, this is not a trade to take. Okay, so you need to go down to maybe a lower time frame to find something, to find some structure. But in this case, if you enter at the break of this candle to get a 1-to-1, your stop loss need to be very close to previous high. And even if you've got that very tight stop loss, you still do not have a 1-to-1. So it is not always, as we see here, easy. But if we go down to the lower time frame, did we have signals on the 15-minute time frame? Well, on the 15-minute time frame, there was actually shooting star formation, a perfect one. This was the trap, and a candle that closed below the low of the shooting star candle. This is your trigger candle. Now it is a much better scenario, because you would be early in this trade. The signal of the 15-minute is not as strong as the 1 hour or the 4 hour, and you need to be aware of that. Again, if the market would give you a 1-to-1 to the major swing low, the previous major swing low, you could go for it. Depends on where that major swing low is. If it is down here, it would not be really a 1-to-1. Or if you want to target the bottom of the range, which is the possible market objective in this case, then you could go for it. Yeah, so be aware of these scenarios. It is not always late to enter a market. If you missed the 1 hour, you could go down to the 15-minute time frame, seeing this correction, retest, and enter on that retest on a limit order. So there is so many ways to do that. And during this time here, we've got another fake move, another trap breaking higher to then push lower. So that was maybe the reason Kashif talking about it was hard traded, because there was a lot of smaller range, as you see here, and the price broke lower to then give you another smaller range to break higher and then push back down once again until we've got that break out of the range. Then it's game over when that happened, and usually you're gonna see a strong push lower, because there is so much stops below here that got triggered and give more momentum to the move to the downside. So that was it about range trading. I hope you find it helpful, guys. There is at least a couple more ways to play it, but that will make this video very long, and we still have the major charts, the major currencies to look at for the upcoming week. So let's keep moving. So we will continue with gold, since many of you seems to be trading gold and you used to get a question about that. So gold, guys, on the daily time frame, we still have a possible bearish market. So an impulse, correction, impulse, another consolidation impulse. We broke previous structure with another impulse, and now we have a possible continuation move. So for monthly S2 as a possible market objective, it looks very possible. Looking at the daily candles here on this move here, a couple of evening star formation followed by bearish engulfing, and Friday was another break and close below the previous low. So seems like we may have a possible continuation to the downside, but be aware of this structure here. This may act as possible support. For more downside, we need to see this structure broken to then look for a correction and continuation. So for gold and for more continuation to the downside, look for that break below for that continuation. So we've been talking about Euro USD and oil already. So here it is pretty clear now that let's take a look on the daily time frame, that after this break below the neckline, we had the retest, and we are looking for another continuation move, which probably gonna be toward these previous lows down here. Before that, we had this previous major swing low that we need to keep an eye at, because the market may have trouble of at that level. So for next week, what we should be looking for here is a possible correction back, if we get any retest to this previously broken structure, to do the same as we did here on this move. We looked for a retest and continuation. So now we are looking for the same scenario. Since this range is now broken, we are looking for a retest and possible continuation. If we take a Fibonacci retracement move, depends on if this is going to be our lowest low. We're not sure about it yet, but as soon as the markets start correcting to the upside, then you could draw your Fibonacci from, depends on when it start to move, but let's pretend it will start move from here. Then the 50% is a nice level here where it happened to be at the previous structure. I would use actually this whole area between the 50 and 618 as my possible kill zone to look for the continuation to the downside on the euro. Sterling daily time frame, also we're still inside this range or bullish flag. It depends on how you see it. So this could be a bullish flag and looking for continuation, but in any case right now we are inside a possible range here, so we should play it as a range until you have a break out of it. So for the sterling, the range here is clear. If we look on the lower time frame as the 4 hour, you see that we are still trading inside this range here. That is what we should be looking for to play until we have a break out of it. So the same as we mentioned in those ranging market ideas, this possibly to reach this level. When it do so, you start looking for a possible bounce to the upside. If we get a break below that range, then we are probably going to the next major swing, which is this area down here. If this market to correct some of this major move here, as you see it is a pretty big move here, I would say we should keep an eye on this structure. This is a good structure, been acting as resistance before a couple of times, support. This is the neckline on this market, so any retest toward this area, it is a possible good level to look for a short. Possible trouble down here at this level, so be aware of that. But if broken, then we are looking for that continuation on sterling USD. USD JAPY, pretty choppy actually on the no matter what time frame you put. So on the daily time frame, we had that break above the previous high and going slowly, and last week was pretty choppy here, as you see. So I don't like to trade in the mid of the range. This slowdown here is a good level. This stop up here around the monthly R1 is another good resistance. So support at 108 and resistance at the monthly R1 around 109.40 area, and anything in between is possible actually on this market. So we do have a possible double bottom here from last week, and this scenario is possible to see something like this to happen. A V shape is a very possible things to happen, and you could also see a continuation to the downside from here. In any case, keep an eye on this level down here where we have the monthly pivot point. That is the key support and key resistance around monthly R1. If that got reached, also to look for a possible short from that level. We are in a ranging market, and even here we should be looking for that. New Zealand USD, let's look at the daily chart on that one. Even here we still have a bit of a choppiness in this one, still not really trending. We had a possible bottom here, we had the break above the neckline, and since then we are going like sideways on this market. What is very important here is this previous structure high. That is the level that need to be broken for this market to really start reversing. If that is the case, you have a big opportunity to the upside. But as for now, we're still seeing how choppy it is. For our time frame, I will keep following this possible trend line here. As far as there is no break below it, there is a possibility for a continuation. So Short-term support down here, if that reached, to look for a possible bounce to the upside, and resistance is up here. This area need to be broken before any continuation to the upside. Now, if this market to keep pushing lower next week and breaks below this area, keep an eye on this level where we have monthly pivot point and this a trend line coming from below. This could be a pretty interesting level. Looking left here, it was resistance, then start acting support down here, and we have monthly pivot point as well as the trend line on the 4-hour time frame. USD Chief, also a ranging market. As you see on the daily time frame, we're still going sideways. There is no continuation. The one thing we have is those higher lows and equal highs here. So we start having some kind of ascending triangle. If you look at it like this, something like this, we start having that possible ascending triangle. But as you saw last week, the market did test another time the monthly R1 here, got tested, and we stopped at that. And as you may know, a break above this is needed for more upside to start talking about testing previous highs. If we look at the 200 moving average, is not respected at the moment. Usually when you start getting sideways like this, you don't see a clear respect of the moving average, so don't think much about that. What you should be watching is actually this previous swing high. That is the key resistance for more upside here. And as you see, last week on the 4-hour time frame, we had a pretty nice push to the upside here, strong push to the upside from this level all the way to monthly R1. At the beginning of the week, since it is the RSI at the overbought and it is a pretty extended leg, we may look for a possible correction to the downside, but be aware of this level. That may give you some support area to then see if the bulls will defend already from this level and start pushing higher. So be aware of that, especially those lows that are getting higher and higher each time. So another higher low could signal possible break and continuation. All in all, it is a sideways market, so sell high, buy low, but be aware of if you're gonna short it to take profit a little bit early, because the moves to the downside are not moving all the way to the bottom. As you see here, they are making higher lows each time. So if this happen again, you may get yet another higher low before that ascending triangle maybe get broken. USD CAD, on the daily time frame, we are having a nice trend to the upside. So each and every time you see a break above previous high on the daily, you should be looking to buy the dips, buy the pullbacks. And if we go down to the 4-hour time frame, it was a clear here. After this move, we had the break, retest, here is the pullback, and the continuation happened to the upside. Another time we see a break, pullback, and possible continuation. So we should be looking to for longs here and targeting the major swing high up here. So if there is no lower lows to be made below this structure, if that doesn't happen and the structure here keep being support, we should be looking for a next leg to the upside on this market. Aussie USD also bearish continuation. So after reaching the top of this trend line, we had a nice push to the downside, break below previous structure low, and continuation. So we should be looking for a continuation move on this market, but be aware that you need to see a break below this level. So we had this bearish flag, we had it broken, retested a couple of times, and we're looking for continuation. But if you're not in a short trade already, you need to be aware of this low down here is a major swing. So the market need to show you evidence, and that is that it's gonna break below. If that is the case, then you could look for a retest and continuation lower. So that is what I'm looking for Aussie USD, and that would be the last market we check here. Many of you guys asking me about entries and exits, and for that I have a couple of great articles over my site that I published last week. I highly recommend you to read them. The links for those are in the description below, so click on that and go read them. You will surely find some good knowledge about entries and exits. So thanks a lot and see you next week. Bye bye.